Hey, this is Greg. Welcome to the channel. So, you think that stock market investing is very difficult? Well, you're not alone, okay? And I spent 15 years on Wall Street as an investment banker where I learned a lot about stocks. And also I spent many years as a full-time investor, investing in both stocks, private equity, and commercial real estate. So along those years of doing that, I learned a couple of things, and I'm going to share some of that wisdom with you now on this video. So as far as I'm concerned, there are two types of investors out there, okay? The first type is the type that wants to have some exposure to the stock equity markets, but doesn't have the time or in some cases the interest to spend the time to learn about it so that they get good at it so they can invest in individual stocks, okay? If you are in the first case, my advice to you is very simple. Take the amount of capital that you're going to allocate to the stock market and put a portion of it in the S&P 500 in the form of the SPY, which is the ETF that tracks the S&P 500, and then put the rest of it into the QQQ, which is the ETF that tracks the NASDAQ 100, okay? So decide what percentages you're going to do of that and just set it and forget it, okay? Thank you very much. We're done. Yes. Mic drop. Bye. See you later. Thank you. No, I'm just kidding. Now, the second group is the group that wants to become a serious investor. They find it interesting. They are fascinated with looking at industries and looking at different companies, and they like to manage their own money. And so for that group, I'm going to give you 5 tips right now that I think will help you tremendously in your learning curve, getting up to speed on being able to do that and hopefully beat the market. Okay, the first category that I just told you about, that's a way to make sure that you at least keep up with the market, which incidentally most professional money managers do not keep up with the market. They don't even meet the market averages. But if you think you're smart enough or you have the interest to beat the markets, here is what you should do. First, let me say, and this comes under the agreement of both Warren Buffett and Charlie Munger, okay, two people which you should definitely follow and pay attention to what they say, but they would agree with me on this. Most people do not have the capacity or the intelligence or the interest or the skill to pick more than 4 good investments, okay? So most people over diversify, okay? If you have a relatively small amount of capital and you're buying 20 stocks, I mean, that's ridiculous, okay? That ensures that you're going to achieve mediocrity, okay? So I think the first step is pick an industry which you either have experience in or an industry that you find very interesting, that you have an interest in, that you want to learn more about, and you want to do the research to really understand the industry. Pick 1, 2 industries at the most. Limit your investments to 4, maybe 5 stocks at the absolute most. Now, I know this violates classical portfolio theory, but classical portfolio theory, to put it bluntly, is for idiots, okay? It's for people that don't want to do the work to figure out what is a really good investment and what is the best investment for them to put their money in. And if you're in the category of wanting to invest in individual stocks, guess what? You have to do the work, okay? So when you do the work, when you pick the industry that you're interested in, you should limit yourself to no more than 4, maybe 5 stocks. I personally hardly ever have any more than 4 positions at once, and I realize that this might surprise some people. Third, pick companies that have a competitive advantage, they have a moat around their business, and there is an extremely high barrier to entry for other companies to come in and compete with them, okay? I also look for really great companies that have a history of growing their earnings both in good times and in bad, and this applies also to dividends, if it's a dividend stock, you want companies that have a very long history of growing their dividends at above market rates. Okay, this indicates a monopoly or near monopoly in their particular business, and this is what I find very exciting, because these companies are going to do well in strong economic times and when the economy gets weak. Examples I would throw out of companies like this are, in the energy space, Exxon, okay, something that I've invested in tremendously over the last 2 years. Google, okay, or Alphabet, another example, a near monopoly in digital advertising and just about every business that they go into. Apple is another example, strong moat around their business. You'd hate to be a company competing with Apple. And that's just a few examples, but the list goes on and on. But find an industry that you like and find really the best companies in that industry. Number 4, something that Warren Buffett talks about all the time: buy these companies at either fair or low prices. Okay, I personally focus on valuation. Okay, I focus on price to cash flow. I focus on price to earnings. I focus on price to book value. I focus on technically where the stock has been trading. But I almost never buy a company, even if it's a stupendous company. I don't buy it unless it's at historically low valuations. And the other thing that relates to that is, don't buy your whole position at once. Buy it in small increments. Take a small position, see how it goes, and continue to build your position over time, and you'll find that this is the best way to build a position. And 5th, and the last position that I'll give you on this video, is when you make an investment, when you believe that the investment is a winner, and when your cost basis is very attractive in that stock, take a meaningful position. Okay, I can't tell you the number of investors I talk to, for example, subscribers and friends and others who went in on Exxon when I went in, and then I ask them, well, how many shares do you have? And they tell me, 50 shares. I mean, where are you going with 50 shares? Okay, you have to have the conviction that you're right. Okay, and when the stock starts to behave like you are right, and you begin to realize that you are into the stock at a very attractive basis, you have to put, at least this is what I do, you have to put a very meaningful position on, so that when the stock is successful and you win big. It makes a meaningful impact on your life, not just 25, 50 shares. It's okay, you made the right decision, but you didn't bet big enough, so in that way you lose. All right, so I basically believe that the reason most people find stock investing so difficult is because, in essence, it's so simple. Okay, the 5 steps I gave you in this video really outline what you need to do, and the bottom line is most people can't do it because it's so simple, number 1, and number 2, you have to do the work. If you want to be an active investor, you want to be a very successful long-term investor where your investing makes a meaningful impact on your life and your family's life, you have to do the work. There's no substitute, okay? But the process is extremely simple, and you want to watch out for getting involved in too many companies that you don't understand, because what will happen is, if the market goes down and you have a loss on paper, you're going to panic and you're going to sell, whereas if you knew what you were doing, you would either hold on or buy more. Okay, well, thanks for watching this video. I hope you got value out of it. I'll be coming out with some more content on this channel related to how newer or more inexperienced investors can become more experienced and can become very successful over time. Now, what you need to do now is, for additional content on this subject, check out this video up here and you'll be in great shape.